And welcome, everyone. Thank you so much for joining us for the Battery Insiders podcast here live from China. We have the CLNB from Shanghai Metals Markets, and I'm very excited to have Gloria with us.
Thank you, Simon, for having me.
Thank you. And now we want to talk about the Australian battery value chain and the battery market. So if you maybe could share with us, our listeners, what are we looking at? Is it more downstream, upstream, midstream? What's the Australian battery market supply chain looking like?
Well, Australian value chain, what I'm familiar with is mostly upstream. That means they are resources company listed and the exploration, junior exploration company, mid caps, small caps, and they're trying to find the treasure under the ground. Obviously, Australia is a very large resource country, so there's a great potential. And so for them, it's working very hard to raise capital to prove the resources so they can bring it to the world, which is the upstream of supply chain. The reason I'm here in China is trying to, after 4 years or 5 years away from China, trying to come here to understand more about mid and downstream, what's happening in this part of the market.
Fascinating. And if you then think about vertical integration, of course, a big topic a lot of people are talking about, and the strategies, especially now from the Australian companies as well, where we know now you have strong background in upstream. What are people looking most for? Is it like foreign capital? Is it more for technology partners?
Oh, it's a bit of both, really, because renewable energy, critical mineral, and carbon zero, all the commitment is global. So every country is made that commitment, which is very exciting because normally is one country commit to something. This is actually global, but it's also a revolution. I think we're going to enter a new revolution era. So for the Australian company, we are looking at investment and looking at technology R&D. So because, for example, in terms of a storage, there's a lot of mismatch at the moment because the technology is not in place, make it quite hard to be affordable for a lot of company and people. And meantime, if you go into R&D, government need to put a funding in there. And resource company looking for investment so they can actually drill. Each time we drill a hole in Australia, they cost a lot of money. So the ASX is helping the company to raise money, and it's all happening in the market. Does that answer your question?
Yeah, I think so. I mean, but on the technology partner side as well?
Yes, and they are upstream. In the old traditional pattern is company talking to one level down. If I'm upstream, I'm talking to my customer, and then as we go. Out of respect, they don't jump the steps. But what currently happening in the last 5 to 6 years, I would say at least, is end user companies start talking to upstream companies to secure the resources. So they sign an offtake agreement, but although they are the far end EV cars, and they're probably funded by government of their country, and they secure the resource, they feel safe, they can sleep now. At the meantime, all the company in between, like a mid tier, they become a toll processing or processing company. In some circumstances, they even do tripartite arrangement. That means end user, supplier, and processing company. So everyone is quite transparent. So there's no pricing secrets like what are you selling me for? Everything's quite understand. The good thing with that is a risk mitigation, because if the raw material price go too high, then it put a lot of pressure in downstream. If it's tripartite arrangement, everything quite transparent. People understand what's happening. There might be a negotiation happening to make it happen. Technology is very important because without the technology, new R&D, and we can't get the EV car affordable to the end user, because if it's too expensive, what's happening in that process that you can't promote the EV car. Look at China. China probably one of the good examples in terms of promoting the EV car amongst normal people. But pricing in the EV car in other countries a lot higher, which is put the pressure on the EV car makers because they want to promote it and encourage people to convert from the traditional way into the new way. How you get people convert, to educate them and also make it affordable for them.
Fantastic. You already maybe also, I think, just for our listeners, I realized maybe not everyone is so much familiar with what are the materials you can actually get from Australia. Of course, hard rock lithium is very known for, but maybe if you can expand a bit on the upstream side, what do we get? Why is Australia so important from an upstream perspective?
Oh, that's a very good question. And Australia is a resource country. The other country I can think of is probably Canada, USA as well. And in South Asia, there's growing number of countries identify resources. For example, Vietnam is the second largest rare earth resource country. So who would have thought, but it's amazing. Currently, we had about 380 close to 380 operating mines. And the commodity that including lithium, rare earths, nickel, cobalt, and everything goes in EV car, even down to like copper that can go into as well. So about 19 commodities that we consider resources that are very rich in Australia. We're trying to get them explored and having a definition on the size of the mine, then we can engaging with the world.
I think interesting, and of course a big mining history also with Australia, so I think that's also helpful. We see it. We might go to permitting later. So, and I think one thing also you just touched on, I think on this price transparency, because one thing we also have seen, right, the difference between price and cost. Also for lithium, we have seen the crazy spikes, the last years, and luckily, a lot of our customers have been protected because they had long agreements, so they didn't suffer from that. But now, of course, the price went down a lot again.
Yes.
But of course, these kind of tumultuous times have been difficult for some of the players who haven't been so well protected with the agreements.
Rare earths is a commodity I used to work in for a long time before I moved to lithium. And both markets have a similar, once upon a time is very high, the other part of time is low. Lithium now is more market sort of controlled, and rare earths, a lot of them is policy and also the quota. But in terms of that, I wouldn't be too pessimistic about lithium, because if you look at the 5-10 years of growth history, on average, we are still above average. So it's not totally fall off the cliff and there's no opportunities. It's just because we're so used to the high. Now we see the low, we're not used to it. The good thing with low is you can only fall so far, then you go up again. When lithium price goes down, we're also self-reflecting what's going wrong. Is it going to be the end of the world? But if you look at the needs and demand for lithium, what's going to the EV car, the lithium market, nothing has changed. When the good time and bad time, that means it's still the future. It's just probably the supply and demand, because expectation is so high, everyone jump in to do it. It is oversupplied and drive the price down. But in terms of the lithium, the future and demand of it, and the role that lithium can play in the market, it hasn't changed.
I think it's a good points there. And if you kind of look also a bit more on the investment, right, and what you need in terms of investments, looking at these projects, of course, we know they're quite capex intensive, right, like big projects. Business payback periods can be quite long for some of them. To commissioning, right, these kind of topics, you're looking at 7 to 10 years. So what are maybe some of your thoughts on this industry? Like, is it difficult to get money for this, or is it
quite difficult? I'm going to say I can only say in the last 3 to 5 years, in Australia, we haven't been badly impacted, especially in WA, which is a capital city of resources. We didn't have a very bad lockdown, but it is because the capital raising from project is very high. In most of the company, it's still exploration stage. That means you need to drill a lot of holes, you need to do a lot of activities. Each activity costs a lot of money. One is a labor cost, another one is equipment, everything goes into it. So every time we say, let's drill 10 holes, 15 holes, that's a lot of money. We're burning cash. In the meantime, raising money in the last few years, mainly from the Australian market. Obviously, through the institutional investors, we raise money from Europe, from USA, but because the way it burn the cash is really quick. And so what we are facing here is to developing a proper mining industry to have a sustainable, how many nickel mines, lithium mines, and cobalt mine we need to grow to keep up with the commitment we have. There's a lot of money need to put into that. I think they talk about 200 billion in there. Where does money come from? Developing a mine properly to put them into a supply chain, it takes about 5 years. Like our field are basically 20 years now. They could be up to 25 years. But downstream, what I'm seeing here, a lot of development happen between 2 to 7 years. So they can go very quickly, and they'll straight away they supply over demand. But for upstream, we are struggling because our period is longer. So I feel a bit of a mismatch here, and where most of the money, I think it could go a bit more upstream to unleash that potential so the material and the supply could go into the market. Then that sort of thing hasn't quite happened yet. But it's part of the growing pain, I suppose.
Totally. And then, but if you talk about now upstream and downstream, and of course there's a lot of upstream happening in Australia, but there's not so much downstream happening in Australia, right? A lot of my friends are a bit upset. There's not enough factories, kind of production. What is kind of responsible for this gap, or how this could be bridged?
Very good question. We don't have a definitive answer on that. For example, we used to have manufacturing industry, but in the last 10, 15 years, sort of we don't even have many anymore. We just become a raw material country. And I think EV car, I only met one company in South Australia trying to manufacture EV car, very smaller scale. And Holden is one of our big car manufacturers. We don't have them anymore. So we do have a lot of a change in the market. And that now, over the past years, many years, we are heavily depends on China and overseas to do the mid and downstream processing. That industry sort of disappeared. Now we realize, no, we have to rebuild it. So governments start thinking about, put the thinking hat on, how we got to have some of the manufacturing industry of our own. Otherwise, we always have to import it from overseas. We export the material, give it to another country like China, Southeast Asia. Then when they bring into final product, we bring it back. That means we have a big gap in the industry, in the supply chain of our own.
Fantastic. And then, I mean, spoiler alert, we're both on the panel tomorrow here. And in our prep talk, we spoke a lot about ESG, which is probably something we don't have enough time for tomorrow in the panel. So I'm now going to bring into this podcast. And looking a bit more on the ESG criteria, and I know there's a lot there. And also looking at, the need there, but also from an investment perspective, looking at the Upstream project, like the role of ESG it plays and the importance of it. If you could maybe expand a bit on that.
Australia has the best mining and resources management industry. Each government in the States, that we have the best, tenement management, geological resource management data system, massive system. If you talk about invest in New South Wales, invest in WA, you can just go online. They have such comprehensive, best in the world. And the other country I know have a very good system that's shared between the states and the federal. They call it Geoscience Australia, Geoscience each state. They manage the data so well. If I want to find a tenements available, I can go online to search for it. That's how well they manage it. So when it comes to ESG, it's already been in the place, technically, because our mine management, environment is so strict. It set a good example for the rest of the world. Now is a lot of countries, because ESG, as I mentioned, it's become a definition for all we've done over the years. And the company now actually started having ESG audit. That means although we've been done, but haven't been as a proper box to tick. For that, and which is a transformation for the industry, because we transform the accounting system, transform the legal system. I even know company used to do, like fund managers, they actually set up a different fund for the ESG. And investors' education is amazing, because investors really pushing the commitment of the company. Say, I'm not investing in company if I heard they're not committed to ESG. I'm only investing in the company that if you committed to the renewable energy, carbon zero, you have to be related to ESG or sustainable growth. Because the word is so overused, you even go into your dreams. So that's why my husband say, oh, don't mention ESG, we overkill it in a way. But it is very important, and the capacity building, awareness, even down to little child, they understand what ESG means. That's how well we push it.
And then looking also maybe more on the regulation side, of course, again, Inflation Reduction Act has been a big topic for the last year or so. But also in Europe, we also have the EU Critical Minerals Act. What do you see kind of maybe some of these impacts of these, policies, regulations, also for investments in Australia?
It is a growing process, although we are very advanced in industry management, environmental management, and permits and everything. You can't do anything without a permit. Water, environment, rehabilitation, plant, animals, everything you need a permit. So you've done so thoroughly. But in come to renewable energy and all that, we just add another layer to it. But obviously the commitment to carbon zero is so big. I remember one area we come into environmental protection. We used to pack the ground, so boundary. Now we can't even pack it because you're damaging the environment. And you can't mark it. You can't even mark the tree. So they push to the extreme in the way. But it's still a learning process, because renewable energy is new. Every country in the world are learning. So Australia is learning as well. How we manage the signing off process, the efficiency, the accountability, and meantime also make the project commercial and not prolong the process and causing too much more cost to the company that's already self-funded and suffering, trying to get the money. So that's a learning curve.
Okay. Maybe kind of a wrap-up question, looking a bit more on the overall, what capital investments needed to go forward. You already mentioned there have been some challenges, or maybe there's costs and permitting, all these things. But I mean, kind of looking into the future, right? We're looking at electrification of the world. We see mobility, stationary, etc. What are some of the requirements, do you think, for looking at the future market from an investment perspective, how this is going to develop?
Well, let me quote it. There's something from Benchmark in our April conference in Singapore, which is a future-facing commodity conference. We have company from Canada, Europe, America, and the UK, and Benchmark producing a figure, say, to achieve 2050 energy conversion, which is a 30-year stay, we need 74 new lithium mines, 62 cobalt mines, 72 nickel mines. And also investment, we're looking at upstream investment probably between 2020 to 2030. The industry, especially the energy storage, we need an investment about 582 billion. And half of it goes to upstream. So that's how much investment we need to go into and to unleash the potential. And for that, and that's a lot of money we're talking about, where is it coming from? Part of it comes from a government. And I understand that Australian government invest, I think, let me check the data, I think that's 556 million to Arafila's rare earth project. They invest 364 million to Liontown Resources, which is a nickel processing plant. So government start putting investment into this sort of project, but this project must be a major status project. I understand that Korean banks and a bank in Germany, they also funded project to support the offtake arrangement on the condition that the resources will benefit the country's economic development. So country are start taking actions. I also understand Thailand government is starting putting policy in place. It's called a EV 3.5 policy, supporting the development of EV cars and resources and processing the whole integration in the country. At the moment, they mainly rely on import from China. So, and the government funding is very, very important. There's a lot of export credit agencies to support. They're partly working with the government. When the government say these are the good projects to support, they are the forefront, basically providing the funding. Obviously, according to the loan with condition attached. But those initiatives are very helpful because if you poorly rely on the company, there's just not enough money to be raised from the current market. And obviously, retail investor is important. I'm also coming here to hoping more investment will coming from China, from the government, and from the company level, and even the retail level. People can take more interest, and it's a learning process as well for the whole industry. How things unfold between now and 2030 and 2050 will be very interesting.
Fantastic. From this, we know there's a lot to do. So we really appreciate the work you're doing, Gloria, and really appreciate you coming on today. And also, we want to thank Shanghai Metals Markets, SMM, for hosting us in this event. And then also all of you listening in from Battery Insiders podcast. You can listen to it on YouTube, Apple Podcasts, Spotify, wherever you listen to your podcasts. And if you're interested in future episodes, feel free to also subscribe on batteryinsiders.com to get notified about them as well. With this, Gloria, thank you so much.
Thank you, Simon. Thank you, Battery Association. Thank you, SMM. Thank you, everyone, for the time.